We're half an hour away from the Open in Hong Kong, Shenzhen and Shanghai. You're watching The China Show, and I'm Annabelle Drulers with David Ingles.
Good Friday morning. Let's get to your top stories today. The dollar set for its best week in almost a year, with global political risk in focus amid this lack of U.S. economic numbers. Stocks across Asia Pacific under pressure after Wall Street's rally stalls.
China unveils new measures to clamp down on price wars, pledging to step up investigations and penalties for violators.
Also ahead here in shows, a pulse check on the Chinese consumer with executives from hotel operator H Group and a folding bike maker Dahon.
And raise your glasses.
Happy Friday.
We're going to be looking at Hong Kong's F&B scene with the co-founder of Bar Leone, just named the world's best.
Good morning. Welcome to the show. Before we wrap up the week, full session ahead, and it's looking like a return of many things, a return of the dollar, some of these shorts perhaps getting squeezed, a lot of the extreme moves we've seen. Dollar yen, for example, 153, and some verbal pushback coming through out of the politics there. Of course, euro is now trading at, 115 because of what we're seeing as far as the dollar is concerned. So, in fact, best week for the U.S. dollar going back to about November of last year. Consequently, it's the worst week for the euro. Flip the page, please, going back to same time last year. Aussie, Kiwi cross, just to highlight the fact that when you look at some of these technicals do indicate that maybe that the weakness has reached fairly extreme levels. Right. Okay. So we're doing not very well in the Asia Pacific. We would be doing much worse were it not for the sort of pickup we're seeing in this reopening in the South Korean markets. All that being said, it's really a week where we are set as things stand to wrap up the week flats. Gold, of course, has had a fantastic run. We're closing in, by the way, to the downside on 4,000. And, of course, in case you missed that headline, flip the page. Silver futures silver topping 50 for the very first time ever. A couple of big names to track going into the Open today. Hesai Group, of course, which is now listed in Hong Kong. Big drop overnight. Some of the EV plays in focus. And, of course, the pullback we're seeing across the broader Chinese equity complex in the Thursday session, going into the Thursday session in the U.S., and futures are doing this. Keeping an eye on the fix, of course, fairly strong one that we got out of the PBOC yesterday. And, of course, we're also looking at this continued rally we're seeing in copper, for example, and other metals as well. But, yes, it's looking like a busy docket today here, Belle.
Yeah, it is really. And if we take a look at what else we're going to be tracking in the session today, I mean, you mentioned some of those sectors in focus. You've got metals, for instance, and you're also tracking what you're seeing in gold, what you're seeing in silver. That, again, as you said, that little bit of a retreat. But also what's happening with the semiconductor space. There's been a huge sell-off we really saw in names like Huawei, SMIC, so the big foundries late into the session on Friday. We can dig into details on why exactly that could be happening. Yuan, you mentioned that fix, definitely stronger than expected as we came back from the Golden Week holiday. Li Chang has landed in North Korea. He's there on a 3-day visit, so we'll get more details on that cooperation, essentially, they're pledging, and also the price war rules is a big one, essentially. We know it's been a big issue. Services is a really tough industry to crack down on price competition. And we've certainly seen that intense competition between JD, Meituan, Alibaba. New rules apparently on the way. And then there's always the NBA. And I think you know the most about this one, NBA China. Back after 6 years.
Do I? But
well,
yeah.
I feel like it's your vibe, isn't it? Is basketball your vibe?
I know how to say it in Mandarin, though.
Oh, well, tell us.
Dalancho. That's basketball. Min Lo, our China correspondent, is going to correct my...
Fact check you.
Yes, she can fact check me right now. We could talk about the NBA. We're talking about markets, price wars, and this joint statement which came through out of, I think, 2 ministries in China talking about how the rules around how to curb these intense competition. Min Lo, our China correspondent, here with us, of course, on set to talk us through. You want to talk about the NBA?
I actually don't know a lot about NBA.
Okay.
I don't play basketball.
Okay.
I'm too short, David.
Have you heard of Mumsy Bogues? Anyway, that's a different story. Tell us about this joint statement and how the market's likely going to react to this.
Yes, I mean, this has been, a long time in the making, right? We have heard, market regulators summoning some of these companies that are involved in intense price competition, but they're upping the ante now. At least the tone from this statement from the NDRC, the economic planner and the market regulator, is saying that they're going to step up price supervision, investigation, and penalties as well. Now, the statement was quite short. It didn't spell out exactly what the penalties are going to be, but they said that any companies that ignore repeated warnings and continue to engage in illegal pricing activity, there will be penalties. And so far, we have seen, for example, the food delivery sector as one that is in focus, right? But those three companies, JD, Alibaba, Meituan, they have already pledged to step back from the competition back in August. Another sector to watch is the EV sector, because those companies have been going against the warnings of the government. They still are keeping prices at the same level, or some even steepening discounts. So that's where we might see maybe more actions being taken as China tries to ramp up this anti-involution campaign to try to break that deflationary spiral.
Okay, a bit of a hard pivot, but we're talking as well about a Bloomberg scoop concerning TP-Link. This is one of the major router companies in the US and also in China. But what can you tell us about the exclusive information we learned?
Yeah, so we're understanding from sources now that the US government is weighing to issue this initial determination that TP-Link is a national security threat to the US. Now, this investigation has been ongoing since last year. They're investigating the China ties of TP-Link, which, of course, originally it is a Chinese company, but the company has, over the past year, really intensified efforts to distance itself from China. In fact, it had split itself up into a Chinese and a US unit. And the head of the US unit did give an interview some time back. He said that he has clearly chosen the US with his actions. He has given up his apartment in a Hong Kong skyscraper, moved to the US, invested hundreds of millions into US factories and R&D facilities. But lawmakers are saying that there are still these ties to China. It could make the company vulnerable to Chinese hacks, even though there has been no evidence whatsoever that the company is complicit with these hackers, which so far in the past it has affected not just TP-Link routers, but also American routers as well.
Another hard pivot for you here, Min Min. The unreliable entity list. China's been adding some names there. What do we know?
Yes, so there are 14 new companies that are added, including some drone companies. But the main one, the big one, is Tech Insights, which is a Canadian company, and its subsidiaries in US, Europe, and South Korea are added as well. And this is a company that is very well known for the teardowns of Huawei products, that has managed to unveil a lot of restricted components from TSMC, for example, including as well high bandwidth memory chips from SK Hynix and Samsung. So it's been very critical to help the industry understand just how far Chinese chip-making capabilities are at this moment. But the Chinese Commerce Ministry has said that the company is helping foreign governments suppress Chinese companies and making malicious comments about China and going against Chinese objections to engage in military technical cooperation with Taiwan. So again, in some ways, it could be seen as a symbolic move, because in some ways it doesn't really stop the company from tearing down Huawei products. It just prevents it from dealing or trading with Chinese companies and individuals.
Yeah, and we should note as well that we have regularly published Tech Insights results or reports at Bloomberg as well. But that's our China correspondent there, Min Min Lo. So, Dave, the other story, of course, and Taiwan's shut today, but it's TSMC results. We got those monthly sales figures yesterday, and strong really across the board. I mean, the quirk of the Taiwan Stock Exchange is that if you're listed on it, you do need to report monthly sales. So yesterday we got the September figures, but you can add to that July and August, so you get a very good sense of what's the third quarter reading going to look like when we get the official results next week. And it did show demand holding up, essentially. We saw an acceleration of around 30% increase in third quarter sales, and it should show as well that revenue beat on estimates, even though the company does have a sort of tendency to guide pretty cautiously as well.
And, the fact that you have a 30% handle on that, and yet some in the market think that it wasn't enough, just underscores, I guess, how high the bar is right now for the AI trade to keep giving, right? And I think also around that same time, a few hours after that, I think Taiwan released export numbers for the month, and, that came in at 33%. Very good numbers. A lot of economies would kill for an export clip that, right? But we're coming off 34%. The estimates were 38%. But I guess to underscore that, but yes, we did get a decline across the ADRs overnight in Taiwan.
Yeah.
And of course, we're looking at, obviously, chip stocks for unrelated reasons in mainland China. But of course, the Japanese cohort is also going to be very much in focus today.
Yeah, that's right. The big equipment makers and the ones that are supplying into TSMC as well. But it does it is an important indication when you've got that general criticism that's floating around right now, some of these deals looking very circular, but actually you could probably take TSMC's results as suggesting that AI demand does look to be remaining somewhat intact.
Well, Microsoft gave us something to chew on.
Well, this
as far
is
as
also
that's
interesting as well, because you got this out yesterday. Microsoft, or what we're hearing is that its data center crunch is going to continue for longer than previously outlined. So really just underscoring how it could be struggling to keep up with cloud demand. Let's bring in our tech reporter, Newly Purnell, for the latest. So what exactly are we learning about this, and how significant as well as the crunch for Microsoft possibly?
Yeah, a great scoop by our colleague Brody Ford in the U.S. Saying that Microsoft, according to people familiar with the matter, are actually seeing physical constraints on where they can put enough servers in places like Northern Virginia and Texas. And they need to add these for the GPU and for the normal sort of traditional cloud hosting services that are key, particularly GPUs, to training models and building up AI systems. Now, it's important to Microsoft because their Azure unit is one of their fastest growing. In fiscal 2025, they had $75 billion in revenues. So, yeah, a really interesting insight into, you mentioned the larger question about demand for AI services, and according to Brody's information, Microsoft can't keep up.
And so what's the big picture here? What does this remind us of?
Yeah, well, again, there's a big question about whether these billions of dollars that people are investing in infrastructure, in data centers, in all this technology is going to be worth it, because a lot of the AI services are so speculative. Okay, we have some that we can use every day now, but a lot of this is anticipating what this is going to do. And I think it's interesting because it shows actual consumer demand, client demand on Microsoft's side. And I think it's also a reminder that the plumbing of all this AI infrastructure build out is something that is still being built. Every time you ask ChatGPT to give you something, or Gemini to create an image, or Copilot to summarize a document, that has a demand on compute. Computers have to crunch that data and return it to you. And so as consumer and enterprise demand for this goes up, there really is, apparently, according to Microsoft, a real big demand from clients for it. So it's an interesting example of not just theoretical usage, but what's happening inside Microsoft, that they can't keep up with some of the demand for this stuff.
Which is a good problem to have, I think, if you look at it that way. Newly, thank you so much. Newly Purnell there, of course, our tech reporter there. And just to mention as well, and while I was scrambling for some of my notes here, because coming up on shows here in about 18 minutes from now, so Taosha Wang out of Fidelity is an Uber AI bull. So we're going to be talking about, before we talk about Golden Week, we'll talk about really how they're massively long semiconductors, big tech hyperscalers, and they're also long on uranium, which she thinks should be the go-to source for energy as far as this is concerned. Now, the reason we talk about that, and just to pivot as well here, we're looking at, what did we just talk about? Oh, yeah,
Golden Week.
Yes, Golden Week.
We've got H World Group joining us. It's one of the biggest hotel operators in China, so we'll have that guest as well joining us just ahead to talk through what they saw over the travel period as well. But we are counting down to the open of trade in Shanghai, Shenzhen, Hong Kong. Futures pointing to a little bit of weakness. We'll get the open in about 15 minutes from now. This is The China Show.
Right, happy Friday, welcome back. You're watching The China Show. I'm just waiting for the reference rate for today. Should be out now. In fact, bottom of the screens is actually that. I've been told in my ear it is out. Okay, 7.1048 against the dollar. Oh, okay, wow, this is a strong one, actually. Okay, let me just crunch the numbers in my head. I'll get back to you in a moment. But yes, I mean, the initial reaction already in the Chinese currency offshore is already showing you that the market is adjusting to a midpoint which was set lower on the exchange rate than I guess most people in the market had been expecting. I think more on this in a moment, of course.
Yeah, and I think we were talking yesterday about 710 really being sort of the line in the sand as well for now. But we'll get more context on that in a moment. But in the meantime, New Zealand's finance minister says she expects the country to return to growth in the third quarter. That's with further acceleration as well on the way in 2026. We spoke exclusively to Nicola Willis and asked her why the economy's been so fragile, with a bigger than expected contraction in the second quarter.
Well, look, we know with seasonal variation since COVID that those numbers have been jumping up around, and there could be some correction to that figure at a later update, particularly given some of the technical factors in that measure. But we were expecting a negative second quarter, and what we saw is after 6 months of strong growth and recovery prior to that, including a 0.9% positive rate in the first quarter of the year, that on the 1st of April, when the Trump tariff announcement occurred, that really knocked confidence out of a lot of New Zealand businesses and investors who looked at that global uncertainty, and for a global trading nation, really worried about where that would go. We're now in a much more settled environment. We know what New Zealand's tariffs are, and we've watched our exporters adjust very quickly to that new reality. And many of the worst side scenarios that had been predicted haven't occurred. And so we're confidently predicting that growth will have returned in the third quarter and should accelerate in the fourth quarter, particularly helped along with an official cash rate that continues to fall.
Yeah, I do want to, you mentioned business confidence there, and the latest business confidence report showed firms planning to reduce investment. How much of a concern is that for you?
Well, we've worked as a government in this year's budget to provide more impetus for business investment through the investment boost tax policy, which offers a 20% write-down on asset investments against tax bills. And that's directly intended to be a tax incentive to encourage investment. And firms have certainly said that that is something that will make some business cases stack up that wouldn't otherwise. And as we look ahead with a lower official cash rate, with inflation now having stabilised back in band, and a government that is ultimately pro-business, reforming, deregulating, we believe that's creating the conditions in which businesses will feel more confidence over the coming months.
All right, so you're expressing some optimism, but of course we had the RBNZ, the Reserve Bank, cutting rates by 50 basis points last week, saying it's open also to further reductions. Does that suggest to you the central bank doesn't share your optimism, that it's worried the economy won't recover?
Well, I think that was the Reserve Bank doing its job of reacting to data in the second quarter that, as you pointed out, was much more negative than had been forecast and quite different from what they had forecast and what had informed their earlier monetary policy path. So the bank is reacting accordingly, and of course with that lower official cash rate, that in itself will be an inject for the economy, and that's, in my mind, monetary policy doing its job. As a government, we're working alongside the Reserve Bank by ensuring that our fiscal settings give them that room to move on interest rates, by ensuring that we're not overstimulating the economy and that we have a path of fiscal consolidation.
There we go. That was New Zealand Finance Minister Nicola Willis there with our colleague Paul Allen. And just to mention as well, right, so the Kiwi was really one of the big negative surprises as far as the performance this week was concerned. There's the Kiwi, there's the yen, there's the euro, and you put all of that together, and suddenly you're looking at the best week for the US dollar because of the weak side of the other side, going back to 11 months back, right? And just specifically on the Kiwi itself, we talked about this cross on the Aussie and the Kiwi. The 14-day RSI there is actually now 73, so the weakness there might be pushing towards the more extreme end of things. Let's put everything together for you. David Finnerty, our FX and rate strategist, is in Singapore for us. David, is this a strong dollar story, or is it a strong dollar because of just the other side of the trade?
Yeah, I think it's the latter, if we're being honest on this occasion. I mean, if you look at the dollar, normally everyone talks about the dollar, it's dollar this because of GDP or Fed or whatever. No one's talking about the Fed. No one's even really talking about the US government shutdown. And obviously, this shutdown is not positive for growth, which wouldn't be positive for the dollar. And normally that would weigh on the dollar. But in this circumstance, the dollar's going, no, we're actually rallying. And why is that? It's the other side of the equation. Certainly with the euro, we have issues in France, with sterling, we have worries about the budget there, so the RBNZ rate cuts in Japan, we have worries over Takaichi and how fiscal policy will work out there, will it impact BOJ. So all these other currencies, it's there in the fall at the moment, whereas the dollar's just benefiting from that. Certainly the euro is one I definitely would watch. It's got the biggest weighting by quite a lot, actually, whether in the dollar index or the Bloomberg dollar index. So sort of where that goes, everyone sort of follows with it. But the other big players, being sterling and the yen, have obviously been weakening as well by themselves. So it's really that side of the equation that is dominating, and the dollar just winning by both default. Basically, none of these currencies, fiat currencies, are looking attractive, but the dollar's the best of the worst. I think that's a good way to look at it.
We just saw the PBOC setting the yuan fix nearly 300 pips stronger than the estimate. How much do we want to read into that, do you think?
Yeah, well, I think certainly compared to the estimate, there can always be a big range going on there, so big divergence. I think at the end of the day, when it comes to the PBOC, look, historically, it likes its currency. It knows the dollar strengthening, so it knows the yuan is under pressure. But any movement, whether it be appreciate or depreciate, it likes it gradual. It never wants sudden movements. It certainly doesn't want any sudden movement weakness because it's worried about these one-sided bets. So it understands currencies will go up, will go down, but it's quite happy to let them go on a gradual measure. So that you don't see this one-sided bet. So I think PBOC at the end of the day is going to go, look, we'll let the currency move, but as long as it grinds whatever direction, they'll be happy.
David, thanks very much for joining us. That was our FX and rate strategist, David Finnerty, there in Singapore. And we are just under 10 minutes away from the open of mainland and Hong Kong markets this morning. Futures are telling us we're going to see some weakness here across the board. So we actually came on stronger yesterday at the start of trading after Golden Week holidays, but we are setting up for a day in the red here. The PBOC fix, of course, for the yuan very much in focus, and we're seeing that move in the offshore yuan there. But you can see there the context. The yuan fix nearly 300 pips stronger than the estimate. We'll have plenty more ahead. This is Bloomberg.
Welcome back. It's looking like we're going to get a couple of 100 points to the downside again today. Hang Seng Tech is down about 90. I was referring to the Hang Seng Index, but yes, 1.5% to the downside. In fact, we're looking at tech specifically today with some of the platform companies in focus.
Yeah, that's right. So we know about the anti-involution trend in China and how they're really trying to clamp down on price competition. Now it seems like regulators have got these platform companies in their sights. So Alibaba, JD, Meituan engaged in a very fierce price war. We are hearing that they're going to be looking at cost investigations, price supervision, enforcement actions. That's the actions of regulators that we're being told will take place. Also, what we're tracking in the session today is what's going to be happening in the chip field or chip realm. You're seeing Inner Science there already under pressure, but that is also another story for us. Yes, yesterday it was down in the session, but we are hearing the company's announced it's going to be raising more than 1.5 billion Hong Kong dollars in a share placement, and that's priced at a discount to the last close. HSBC, another name that we're tracking here today.
This one.
I mean, a downgrade at Jefferies. Is it kind of any surprise, Dave?
Well, I mean, they're giving up the buyback because they paid a premium for 30%. Now, longer term, is that an issue? Shorter term, it might be an issue. The market's reacting that way. The open is next. Good morning. We are gearing up for the Friday session. I'm already thinking about the weekend. Later on in the show, we have the world's best bar joining us. Just to highlight the Friday theme we have on shows today.
It is a big Friday theme, but Bar Leone was just crowned the world's best bar. The first time we've seen an Asia-based bar taking that top prize as well. So we'll get into the details of that. But in the meantime as well, I guess the reason people might need to have a drink is just how we're setting up for the session in China today, because it does look like we're going to open in the red.
Yeah, in fact, if you've been tracking this from yesterday, I wouldn't be surprised if you already have a stiff drink in hand as you look at some of these stiff losses going into the open today. We're still trying to figure out, it might just be valuations, might be something else, the trigger for that chip loss, the drop in chip stocks yesterday. We can get to that later, but yeah, CSI 300 following the reopen yesterday. We were up as much as 2% at one point. We are pulling back from that as well, and of course the fix of the day. But yes, go ahead.
Yeah, no, I mean, the fix of the day is really something to be keeping a track on too, because we saw it a lot stronger than the estimate, nearly 300 pips. But the yuan has been reacting to that. But yeah, you mentioned that the chip moves we saw yesterday late into the session. Actually, Cambricon held up pretty well. That's the chip designer. But you can see here down nearly, 2.7%. We're going to get more details into just the valuations we see as well, and others looking a little bit too stretched. You're seeing as well that the big companies there, Kweicho Motai, CATL, Ping An, all of these are in negative territory so far. As we said, though, it was actually a pretty solid start back after the Golden Week holiday, with the CSI 300 ending up 1.5%. So a reversal today so far. But Hong Kong, let's also take a look at what's happening here, because we've seen now this is building into a fifth straight session of losses. And again, it's the tech story really bearing the brunt of this. There's a couple of different themes that we're tracking, but you can see here that key one we're really watching, which is price competition between Alibaba, Meituan. If you change the page, take a look at some of these platform businesses. Regulators are saying that they're going to have new measures to try and rein in the price wars. This has been very intense between Alibaba, JD, Meituan. Now they're looking at the steps they can take. Are we going to see cost investigations, price supervision, enforcement actions? That's certainly what's been vowed. But you are seeing, again, that sell-off there so far. In the chip space as well, there's another story we're tracking. So Inner Science is one that did drop yesterday in the session, but you can see here a decline of more than 6%. They are raising 1.5 billion Hong Kong dollars, or just over, in a share placement, and that does represent a discount of nearly 8% to the last close price. Other chip stocks are watching as well, because we did, as we say, we saw some declines yesterday for names like Hua Hong, SMIC. Again, both of those off nearly 6%. Today, you're still in the red, but not quite the same extent so far.
Yes. Maybe just to add to what Belle was just pointing out, and I think we'll get to the chip story in a moment here, just keep in mind that China's top leadership has pledged to break involution, and certainly you see that in some of these names and how they've traded this year. Meituan, BYD, just to be more specific. Right. Now back to the chip story, right? So we're taking a step back. It's certainly been a very good period and run, and not to say that run is over, but certainly when you look at the price itself here, they've really outperformed, really staging this world-beating rally in recent months amidst this push, of course, for self-sufficiency, but valuations might be on the loftier side of things, and testing maybe the patience of some pockets of investors out there. Jeannie Yu, our Asia Stocks reporter, is here with us to talk us through the piece for the day. Yeah, so how expensive are we talking here?
I think Cambricon, for example, like all the retail investors in China, they would call Cambricon like China's NVIDIA, and that's trading like more than 150 times, forward earnings multiples, compared with, I think that's more than 5 times of NVIDIA's forward earnings multiples. So obviously you're seeing a very, very crowded trade here. There are a lot of reasons behind this kind of frenzy, as we can tell, all the big Chinese tech companies that have all those big capital spending to roll out all the AI models, and then the theory about, China rolling out more policies to support, to achieve the chip sufficiency in their own semiconductor supply chain, all those news, continue to fuel a kind of like frenzy. I think when we talk to investors, the big question they have is like, okay, this is a solid story. We're gonna, it's a multi-year story, for China's semiconductor, for China's chip maker to play a catch-up, with the U.S. rivals. But on the other hand, like this is really testing people's patience about this. How fast they can deliver the earnings, like how fast those things can be turned into real gains. And I think that's one big question, when investors consider whether they're going to chase the rally from here or to take profit. And that's one of the reasons we're seeing like mainland traders, for example, after the Golden Holiday, after Hong Kong market opens, they've been big seller of SMIC shares because all the valuation concerns going on. It's actually one of the most sold stock on the southbound trading links over the past few days.
Yeah, it's a big question, even when you've got names like Cambricon that are saying the company itself what you're seeing in the share price does not reflect the fundamental as well. So we'll get more on that now, because that was our Asia Stocks reporter, Jeannie Yu, there. But we do have a guest, Taosha Wang, joining us, portfolio manager at Fidelity, very bullish on the broader AI space as well. But Taosha, we'll bring you in now. So what's your view on what you just heard there from Jeannie, and I guess what are we seeing in the China chip space? Do you want to take any profit, or are you in this for the longer term?
Well, first of all, we are still in a bull market that has done so well so far year to date. There are obviously two components to it. There's the China component to it, and there's the chip and AI component to it. With the China side of things, I think, there's still the global investor interest in China, the equity market, is still, sustained, and it's still strong. Macro is improving, valuations by and large, still reasonable, and investor positioning is still not that crowded. There's this sort of secular narrative shift of China being, exporter of goods, cheap goods, to a place of cost competitiveness, cutting-edge technology, innovative and disruptive business models. All of these things are hard to miss out for global investors. So I think that's the China piece of it. And there's obviously the AI piece of it, and the AI/chip piece of it. And I do think that AI is one of the most important, investment themes that we're seeing today, possibly for quite some time. I think at a global level, the fact that the technology continues to improve and commercialization effort is deepening at the same time. So they're working together, I think, to make this AI boom more sustainable. One going ahead of the other is less sustainable, but technology and commercialization working together is much more sustainable. And remember, these things are being funded by really, really deep pockets. Now, another thing I wanted to touch upon is that I think AI extends beyond just a growth equity story. It's a macro. It has strong macro implication as well. The dollar amount, we're talking about hundreds of billions of dollars. These are big macro moving figures. And you can definitely see this spill over from commodities, for example. Big capex going on at big companies, and these companies may be prioritizing spending on capex over hiring human employees, and that can cause a certain softness in labor market, which forces central bank to react, which again adds to this jobless expansion and creates more inflationary pressure, which again fuels the commodity sort of potential super cycle going there. So I think the narrative is big. Certainly there are stocks where people may be a little bit nervous taking profit, but there's much, much bigger sort of forces at play as well.
I think there's very little question that there is promise in the technology, right? I think I remember back, people were debating as the internet was just coming into free, right? I don't remember anyone back then debating whether it's a race for internet supremacy. It's just the fact that everyone was better off having the internet. But as a fund manager, how useful are valuations for you to inform you of what to do in terms of just portfolio allocation, for example? Or is it, buy, hold, and pray?
Valuation is certainly very, very important. We have what we call the FVT framework, the fundamental valuation, technical, all of them are incredibly important. But valuation itself does not move market. The market is not going to go either up or down because the valuation is high, and vice versa.
That's right.
So it's not a driver per se. It's something that you keep track of at the back of your mind.
And there are no red flags as far as your framework is concerned, going beyond valuations, looking at technicals, for example.
Technical is certainly very important. We're all in the market to trade, right? So you got to be very mindful of the technical side of things. So I would consider some of these sort of technical adjustments in a bull market at this point, at least.
But when you're talking about you mentioned some of those the sort of the second order effects, I guess, or the second order plays, copper, uranium. Are they the sectors you're more interested in, rather than looking at, say, the most obvious beneficiaries like the Nvidias of the world, or even the most obvious beneficiaries in China?
I am interested in both, but I recognize that some of that super popular trades, including the China broader beta trades, they are consensus long right now. And there's nothing wrong owning consensus popular long positions. It's just that you got to be mindful that it is a consensus trade. Whereas I think on the commodity side, copper, uranium, there's less consensus. And I like to think that the upside reward is potentially more asymmetrical. So what we call convexity. If you're right, and you're really right.
Yeah.
You're less wrong. Yeah. So that's the way I think about it. You always want to have some consensus position in your portfolio and some non-consensus positions.
What do you think is lacking with the uranium story? Because you think that should be people talk about how this AI trade needs energy sufficiency behind it, right? And you think uranium is the answer to that. There seems to be a gap between where you think and where the rest of the market thinks that is currently.
Yeah.
What do you think that gap needs? What do you need is needed to close that gap?
The physical construction of these projects. So nuclear projects notoriously takes long to construct. It takes years, and actually that construction. And by construction, I mean pre-approval, getting the regulation right, getting the funding, getting the thing actually built and tested. So all of that is a big driver of your return on the project, and big driver of whether you end up investing or not. Now this is one of because it takes still so long to make these physical projects happen. The physical upfront demand right now is not as high as what it could be in the future. What this means is that I feel like at this point it's better expressed via equity, because equity is all about forward-looking growth compared to the spot price of the commodity, which is more related to demand today, like usage today. So I think that's the uranium story. I think it's a longer growth story, but there is so much, again, convexity. There's so much asymmetry to the potential upside. If you look at where we are compared to historically, maybe 1 or 2 decades ago, where the market were trading, some of the other commodities, for example, copper, much more present, gold, super present on everybody's mind. So I think just even within the commodity landscape, they share the characteristics of being being able to, sort of account for that inflation.
Yep.
The shared characteristics of benefiting from, big capex, maybe related to AI, de-dollarization, a lot of that. But they have their nuanced differences in terms of, what actually drives their price action today and tomorrow.
Okay. I think you're bullish. I'm not sure.
I am bullish. I am rationally bullish.
You got that point across. Don't worry, Taosha.
Yeah. Taosha Wang there. Of course, happy Friday to you. Hi to the team for us. PM there at Fidelity. Right, coming up here in shows, we will be checking in, I like this, on China's hospitality sector after the Golden Week holidays with one of the country's biggest hotel operators. H World joins us for an exclusive conversation coming up next. This is The China Show.
Well, we've got another. Whoa.
Yes, I know. I was like, what's happening here?
You've got to look at the pricing on this one. Obviously, this is a pretty cheap stock in Hong Kong, one you maybe could liken to a penny stock here. But we do have a debut, and I mean, you're seeing a very big surge here for Golden Leaf International on its first day of trading. We've also got another listing taking place. This is Shanghai Jita Technology, also very strong surge, but priced, of course, a little bit differently.
Yeah, well, I mean, the fact that 170% is the underperformer.
Yeah, I don't know why I downplayed that.
how things have actually turned out. Okay, let's talk about Golden Week as we, of course, wrap up what's really been a very long holiday. Markets are reopening. You have one of the largest hotel chains in China, H World Group, says it actually saw a 36% increase in guest days over that long holiday compared to this time last year. That included a 57,000 foreign nationals, 81% occupancy across its portfolio, and lower tier cities also saw the biggest demand. Joining us exclusively from Singapore is Jihong, H World Group's Chief Strategy Officer. Jihong, well, first, very nice to see you and good morning. Thanks for joining us again. Clearly, big numbers. Where does that now place you in terms of your targets that you set out at the start of the year, in terms of your full year objectives now?
Very nice to meet you again, David. And nice to meet you, Annabelle, as well. Yeah, we had really, the best holiday season in our history, over this golden weekend. You have shown the numbers. So we are very optimistic about the travel market in China, and we are on the right track to achieve 2,300 new hotel opening this year. And we have given our full-year guidance, and we'll stay with our full-year financial guidance as well.
What did the makeup of the traveller look like? I can see that you reported, for instance, stronger overseas visitors or international visitors, but what was sort of the age range? What was the spending pattern? What did you see exactly?
So we see travelers actually across all age range. Actually, travel has now become, I call it almost a necessity in China now. After the whole, COVID experience, people really value experience over material possession. So, age of, Gen Z, normal age people, or even we have seen a lot of we call them silver hair economy retirees traveling as well. This holiday season, we have seen, surge of more, although 60% of our travelers actually coming from young generation between 20 and 40.
Can I ask you too, these are very impressive numbers. We talk a lot about here on the shows about some of the price pressures we're seeing in other industries, to be more specific. But I wonder, you run a lot of properties across mainland China, across different tiers of cities, and I wonder how you're looking at demand in this economy and how that's affecting your pricing strategy.
We have really seen a surge of, we call it mass market travelers, because after all this material possession, people are looking for how can I really cherish my life. So we have seen people really started to travel. They travel for different reasons. They travel for business, of course, but a lot of families are traveling for adventures, for natural beauty, and also for a lot of local events, music events, concerts, even grill festivals as well. And some of them adventure out, of course, to remote areas to look for natural beauty and solitude. So we have 12,000 hotels across China. Our hotels, we do not only see hotels of good occupancy in Tier 1 cities, we see more and more demand in Tier 3 and Tier 4 cities, even in remote regions as well. So our goal is really to go where the travelers go, where our customers go. We developed this H Rewards app, which really provides really seamless technology experience. So our app accompany our customers no matter where they go, how remote it is, and they can just check in, check out, through our app, select our hotels on the app. So we are really going very strongly in the lower tier cities.
Jihong?
Yes?
Yeah, so but on that question around lower tier cities, and I'm interested to know the pricing. Did you have to shift your pricing at all to try and lure people in? What have your hotel prices looked like for this period versus, say, a year earlier?
So the lower tier cities, actually the hotel price, it changes every day, depending on the demand and the supply on that day, on that season. In this holiday season, we have seen very strong demand from the lower tier cities. In October 3rd, more than 8,000 hotels are fully booked out. Some of the cities, lower tier cities, like Huaihua in Hunan, or Neijiang in Sichuan, or Luoyang in Henan, has been fully booked out. So, the price really, price is a function of demand and supply, and we have been seeing very good price trending as well. And our average daily rate, especially, sorry.
But have you actually had to lower your prices versus a year earlier?
Actually, over the Golden Week, our average daily rate in Tier 3, especially in Tier 3 and Tier 4 cities, has increased year over year. And our average daily rate across our whole portfolio also increased.
Jihong, very quickly, next year, what are your objectives have you guys been setting? Because it's the time of the year when you start looking at 2026.
Yes, we look at the China hotel market is really still an untapped hotel market, and it is the largest single hotel market in the world. So, for the next 5 years, we are looking into double our hotels. So we're looking at achieve more than 20,000 hotels in 2030, and we will continue to drive our fee business. Currently, 2/3 of our gross profit margin come from fee business, and we'll continue to drive this asset-light business model. So we will work closely with our franchisees, partners, to really, open more hotels in China.
Jihong, thanks so much for your time this morning. That was Jihong He, the Chief Strategy Officer at H World Group, and we'll have plenty more ahead. This is Bloomberg.
Right, just welcome back. About 25 minutes into the session, and it's a down arrow story across cash markets, led by tech, led by Hong Kong. We're down about 1% there. MSCI China's down about 0.9%. There's plenty more ahead here on shows, including, of course, we'll be unpacking the latest anti-involution measures that were announced going into the Friday session. Plenty more ahead. Lots more on the way. You're watching The China Show. All right, we're just going to get you started here with some breaking news out of the Philippines, where a very strong earthquake has just hit a few minutes ago. This is a 7.4 based on the initial numbers that have come through. This is in the extremely southeastern part of the country, towards a little bit east of Mindanao, which is the southernmost island of the Philippines. We are also getting a lot more potential tsunami warnings coming through here.
Yes, this has just also been announced in the last few moments as well. So Indonesia has now issued a tsunami alert for North Sulawesi. That is also close to this region here, where the earthquake has been triggered, and also for Papua as well. So we will continue to update you on those details as they come to hand, but just to recap the top line, which is a 7.4 magnitude earthquake, has just been reported 33 kilometers southeast of Bacolod in the Philippines. So we'll leave that there. We'll just take a look as well at how markets are trading, because we're half an hour into the session now for the Hang Seng, and you can see here quite a lot of pressure that's building, and it's quite broad-based really in the session today as well. But some of the biggest movers that we see so far, it's definitely a tech story, which is sort of not too surprising in the context of tech really having led the rally. Is this sort of investors that are taking a breather? Are they looking at any potential signals? Of course, you're looking ahead to earnings season as well. It's going to be very pivotal, testing this thesis that tech can be the sector to really deliver. But the biggest laggard so far, Tencent, Alibaba, SMIC, Baidu, JD. I mean, a lot of these names are in the red today.
And these are the names that, to the point Bell was just making, that these are names that have led this rally on the way up. So in terms of just potential triggers, there's also the macro overlay here, where you have a stronger dollar that's come back. So really, in many ways, that's really, I guess, in some ways forced some folks to take profits off the table as that trade has sort of reversed this week. The dollar is set for its best week in 11 months, and that's really not really down to what's been happening with the dollar, but just the absolute weakness we're seeing on the other side, with dollar yen at 153, euro at 115. We're also looking at, of course, a Kiwi dollar that has massively underperformed following the price cut out of the RBA, larger than expected cut, and of course also a lot more in terms of the surprises coming through this week, not just out of the RBNZ. We'll get into this later on, but speaking of the Philippine Central Bank surprised the markets with a cut yesterday. and of course, other parts of Southeast Asia. We'll get into all of this in a moment here. But yes, other things, CSI 300, Korean markets are coming back online today.
Yeah, well, Korea's playing catch-up here.
Yeah.
You can see 1.4% in the green, although it is actually off the highs of the day, so maybe it's also just catching a bit of a drift downwards because you can see the broader gauge is off 0.7%. But yes, as we said, Chinese markets yesterday a day pretty strong coming back from the Golden Week break, but today, of course, you can see off 0.8%. And there's a few different sectors in focus, but one of the main ones is what we're seeing in terms of regulators that are very focused on anti-involution and now very focused as well on the price wars that you see from the platform company side.
Where it's been really visible, the price competition across those.
Yeah, I mean, it played into their numbers. You saw that in Meituan's numbers, for instance, really one of the ones bearing the biggest brunt.
Yeah, guidance. And if it, in fact, if it were not for the AI that suddenly come back, I would imagine those markets would have been treated those stocks as kindly as they have, given everything that's taken place. But yes, to Belle's point, right? A joint statement yesterday, I think, out of two ministries coming out and basically putting more meat on the bone here as far as these anti-involution priority is concerned. Let's bring in Min Min Lo, our China correspondent, to just help us understand what the statement was, what these rules were, and how strong these new measures are.
Yeah, I think it's going to spell the end of the era of free milk tea on all these delivery platforms, because one of the most visible form of the price competition is really, really cheap food on the food delivery platforms. But of course, yeah, these three companies, Alibaba, Meituan, and JD.com, they have already pledged to step back from that competition back in August. But we have this stronger tone from the Chinese government, from the market regulator, from the economic planner, NDRC, putting out the statement that says that regulators will be stepping up price supervision, investigation, and penalties as well for companies that repeatedly ignore warnings and continue to engage in illegal pricing behavior. And they're particularly warning against below-cost bidding or pricing among companies. So the delivery sector is a sector to watch, but also the EV sector, because that's a sector where many companies have been ignoring those calls and continuing to offer either steeper discounts or at least keeping prices at the same depressed level. So perhaps we could see more actions being taken against some of these companies.
That is the platform company side, and as we said, when you take a look at what's dragging today, Alibaba, JD, and Meituan are some of the biggest losers. But what else are you watching in terms of the session dynamics today?
Yeah, I mean, so many sectors are down, right? Part of it is the price competition warning from the government. So the EV sectors, the EV stocks are all pointing downwards, the food delivery sector, but also, as you said, the chip sector as well, because we have seen a second day kind of action going on, because yesterday we saw a big sell-off, very unusual move there on SMIC and Hua Hong, off by about 6% yesterday. We continue to see a second day of a sell-off today. I believe we can show the chart. I think it's down about 4% or so on SMIC. And again, you know, Jeannie Yu earlier today was saying how, 5% down now, even further declines for Cambricon, Hua Hong, and SMIC. And Jeannie Yu earlier, she was saying about, she was talking about how Chinese chip stocks are really expensive now. If you talk about the price to earnings ratio, even higher than some of their global peers. And not surprising, if you look at how much Hua Hong has gained so far this year, I think it's close to 300% year to date. The same thing for SMIC, it's a triple-digit gain. So perhaps people are just taking some profits off the table, although there was some rumors going on yesterday online, which we cannot verify, by the way, but there were some rumors about how brokers are no longer allowing SMIC to be used as collateral against for margin trading. Again, we can't verify this, but could potentially be something that is causing concerns among investors.
Well, a careless whisper would cause a drop like this, particularly at your point, right, with valuations at about these levels. Min Min, thank you so much. Min Min Lo, our China correspondent, the way to wrap up these markets. Yeah, and when the chips fall, they are falling as we speak. Right, just ahead here on the China show, we raise a glass to the world's best bar. Of course, there's the one in Hong Kong, which is named, of course, and its co-founder will be joining us in a couple of minutes to, well, first tell us how they did it, and second, to talk us through the broader implications and what this really shows as far as the F&B and hospitality industry and the challenges here that Hong Kong faces, and whether or not we're seeing a cocktail-led recovery. Welcome back. New Zealand's finance minister says that she expects the country to return to growth in the third quarter with further acceleration as we look into next year. Now, we spoke exclusively to Nicola Willis and asked her why the economy has been, well, so fragile with a bigger than expected contraction just recently.
Look, we know with the seasonal variation since COVID that those numbers have been jumping up around, and there could be some correction to that figure at a later update, particularly given some of the technical factors in that measure. But we were expecting a negative second quarter, and what we saw is after 6 months of strong growth and recovery prior to that, including a 0.9% positive rate in the first quarter of the year, that on the 1st of April, when the Trump tariff announcement occurred, that really knocked confidence out of a lot of New Zealand businesses and investors who looked at that global uncertainty, and for a global trading nation, really worried about where that would go. We're now in a much more settled environment. We know what New Zealand's tariffs are, and we've watched our exporters adjust very quickly to that new reality. And many of the worst side scenarios that had been predicted haven't occurred. And so we're confidently predicting that growth will have returned in the third quarter and should accelerate in the fourth quarter, particularly helped along with an official cash rate that continues to fall.
Yeah, I do want to, you mentioned business confidence there, and the latest business confidence report showed firms planning to reduce investment. How much of a concern is that for you?
Well, we've worked as a government in this year's budget to provide more impetus for business investment through the investment boost tax policy, which offers a 20% write-down on asset investments against tax bills. And that's directly intended to be a tax incentive to encourage investment, and firms have certainly said that that is something that will make some business cases stack up that wouldn't otherwise. And as we look ahead with a lower official cash rate, with inflation now having stabilised back in band, and a government that is ultimately pro-business, reforming, deregulating, we believe that's creating the conditions in which businesses will feel more confidence over the coming months.
All right, so you're expressing some optimism, but of course we had the RBNZ, the Reserve Bank, cutting rates by 50 basis points last week, saying it's open also to further reductions. Does that suggest to you the central bank doesn't share your optimism, that it's worried the economy won't recover?
Well, I think that was the Reserve Bank doing its job of reacting to data in the second quarter that, as you pointed out, was much more negative than had been forecast, and quite different from what they had forecast and what had informed their earlier monetary policy path. So the bank is reacting accordingly, and of course with that lower official cash rate, that in itself will be an inject for the economy, and that's, in my mind, monetary policy doing its job. As a government, we're working alongside the Reserve Bank by ensuring that our fiscal settings give them that room to move on interest rates, by ensuring that we're not overstimulating the economy and that we have a path of fiscal consolidation. And so, look, the Reserve Bank itself is continuing to forecast that there was growth in that third quarter, and they agree with our Treasury assessment that growth will forecast over the coming months, getting back up to very healthy levels next year.
Well, Treasury will deliver you another forecast in December in its half-year update. So what are you expecting in terms of that forecast? Do you think it could be cut, and what would that mean for tax revenue?
Well, look, so far, actually, our tax revenue is holding up. We released our 1 year in review financial statements yesterday, and they demonstrated that the tax take was actually up on what Treasury had forecast at the budget that it would be. In fact, all of the indicators in that update essentially were a little better than we were predicting. Our core fiscal measures that the government is targeting around net debt actually stayed steady. When we look at the deficit, that was smaller than we were expecting, and spending as a proportion of GDP was also smaller. We're on target to reduce that over time. So at this juncture, Treasury's updates in terms of the real data rather than the forecast data are, as I say, running positively relative to forecast.
Obviously, the longer-term goal here is to get the budget back into surplus. Can that be achieved by 2028? And if not, when do you think it could be achieved?
Well, that remains our fiscal goal, and we do think that will be achieved. In our latest budget, we were getting to surplus out a year beyond when we would like to. We've kept that goal of doing it a year earlier. And in order to achieve that, we're following a path of fiscal consolidation. We've had very low operating allowances. That's the discretionary spending that the Crown does, very low relative to where they have been historically. And we've supported that with a savings program that so far has delivered around $43 billion worth of savings. We want to get spending back down to 30% of GDP, where it's broadly sat historically for New Zealand. It leapt up over 34% during the COVID era, and we think it's a much more sustainable position to get that back down. We've charted a path that gets us there, and we're confident that that surplus path is achievable with fiscal discipline.
That was the New Zealand Finance Minister there, Nicola Willis, speaking exclusively to Bloomberg's Paul Allen. And central banks in the Asia-Pacific have gone 3 for 3 this week on surprise rate decisions. You had the RBNZ kicking things off by cutting its key rate 50 basis points. It was 25 basis points that was anticipated. The Bank of Thailand also held steady. Some have been agitating for a cut, but you did see it sending its currency higher as well. And then also yesterday we had the Philippine Central Bank unexpectedly reducing its rates as well. And they're looking at sort of the economic unease. Well, that corruption scandal ongoing is certainly continuing to make waves, Dave. Yeah, I mean, it's the fact that it showed up in monetary policy when very few economists actually saw that coming. Yeah. We did hear, of course, we spoke with a stock exchange operator this week, and he was very direct in saying that's the reason why the market's been underperforming. And I think I've read some reports that the SEC head, the securities regulator head in Manila, also blamed the corruption scandal as really just the crux of the vacuum of confidence among investors and really why the markets declined. Foreign and local investors. Foreign and local. And locals are leaving, so foreigners are. I think the point that the Philippine Stock Exchange was talking about this week. Now, just to break down all those numbers for us, and what's really been a week of unexpected, suffice to say, surprises really in parts of this market where we weren't really expecting to see any surprises. Swati Pandey's with us right now, our Asia Pacific economy reporter. Yeah, Swati, is there a common thread between these three, what we've seen so far, or are these more idiosyncratic factors?
It's a mix, actually. So the common factor is that the domestic economy required what the central banks did, but individually they all have their own nuances. So, for example, in the case of Thailand, the economy has been weak and the currency has been going up, surprisingly, and there was expectation that the Thai central bank would cut interest rates to support the economy, but the central bank's own judgment was that they could wait and see whether the previous stimulus is feeding into the economy, and they just wanted to remain a little bit more patient before cutting interest rates further. In the case of New Zealand, they did not want to be patient. They did not want to do the 25 basis points that was anticipated. They thought that the economy needed bigger stimulus. They've been kind of felt like they were running out of patience on waiting for the economy to really show that animal spirits that they would like to see. Inflation has been subdued, and really since last year, business confidence and economic growth in New Zealand has been pretty disappointing. And Philippines, again, was the corruption scandal, right? Like you mentioned, people had not expected that to come up in the monetary policy statement and decision making. So in that respect, the common thread is that the decisions were made purely on individual domestic reasons, and those reasons were different for these different economies.
That's interesting. So, because when you take a look at it sort of in aggregate, one of the easy conclusions you might be able to make as well is that this could be related to President Trump's trade policies, for instance. So is that having any sort of bearing?
Look, trade uncertainty is something that policymakers across the world have spoken about, even though we now have greater clarity on what those reciprocal tariffs are. So in that sense, Asia is not as worse off as it was anticipated, let's say in April, and the policymakers are cognizant of that fact. The PMI data that we have seen out of Asia has also been mixed. There was a report from Goldman Sachs last week which said that the impact on manufacturing activity, factory activity, has been disproportionately negative, or has surprised disproportionately on the negative side for Asian economies. So that does remain a factor in decision making. Policymakers are worried about how these tariffs may impact their individual economies. And given that inflation has remained subdued in the region, many countries do see that as giving them more room to provide support to economy by providing that stimulus.
Swati, thanks so much for joining us. That was Swati Pandey there in Sydney. And we do still have a lot of monetary policy moves to watch, because we've got China, Indonesia, South Korea, Pakistan and Japan. Of course, this is very much a live decision as well to cap us off. And that's just before the end of this month, Dave.
Yeah, not to even mention the Fed. Anyway, but the Bank of Japan is going to be interesting given the developments recently, and might they actually, I guess in some ways, comment on this currency, which has really been on the weaker side, and might that actually be a reason for them to actually then lean into some tightness. Now, the reason I bring that up is we're getting more commentary coming through, and just to mention this, out of the Japanese officials, and more, I mean, do we call this verbal jawboning? Mr. Kato is not seeing one-sided
commentary
moves
on it, and we have seen that this week. But yeah, the finance minister Kato just speaking now in Tokyo and saying that the government's going to be closely investigating or examining excessive FX moves. It's important that the moves as well reflect fundamentals. It's that word stably again that we discussed earlier this week, but they do want it to be moving stably, and also commenting on stock prices as well, because these have been reacting to Takaichi's the election.
Who herself commented yesterday that she was not in favor of excessive yen moves.
So this has been interesting because she did yesterday exactly kind of push back on this notion that she would necessarily support a weaker currency. Yeah. She also has been careful, I think, to couch the independence, or to highlight the independence of the BOJ from the government, which is something that was an early misstep of Ishiba when he took office. He made comment on the direction he thought the BOJ would take. So Takaichi has been distancing herself. So we did see that initial sort of relief being reflected in the currency, but it's certainly still very much on the weaker side.
Yeah, 153 against the dollar, not to mention the other crosses there. Just ahead here, this is a bit of a hard pivot here, but yes, we'll be talking about Chinese bicycle maker and the founder and CEO of folding bike maker Dahon. David Hon will be joining us in a couple of minutes here about the company's recent listing here in Hong Kong, their expansion plans, and really what they're seeing as far as the industry is concerned. Yep, so David joins us in a couple of minutes. And ahead of that, of course, we'll be looking at giving you guys an update of this massive earthquake that just hit Southeast Asia, south of the Philippines. More on that in a moment. Plenty more ahead. To our viewers just joining us right now, you're looking at, of course, this is the website of the U.S. GS, and as you can see, there have been several strong earthquakes, and we'll talk about the one in blue now. So about, let's call it 25 minutes ago, it's under 30 minutes ago, an extremely strong earthquake hit the southern part of the Philippines. Initial data suggests it was a 7.4 magnitude quake, southeast of Bacolod in the Philippines, and as you can see, that's towards the southeastern part of the country. And since that point in time, we've had either related earthquakes or other earthquakes in that part of the world, fairly strong ones too, and that's also prompted authorities to put out fairly pointed tsunami warnings that could result, of course, from these massive earthquakes.
Yeah, it does seem to be strongest for the Philippines. So we're now getting a tsunami threat forecast that we could see waves reaching 1 to 3 meters above the tide level. That's possible among some coasts or along some coasts of the Philippines. Also for Indonesia and Palau, we're hearing that tsunami waves could reach between 0.3 to 1 meters above the tide level. That's what we're hearing. Of course, this can differ from the forecast, but we are just seeing these second-order effects, given you did have that earthquake just being reported, as you said, in the last half hour or so.
Yeah, okay. Again, recap. I think we now have more details on this, too. So the Pacific Tsunami Warning Center, just to reiterate what Belle just said, tsunami waves reaching 1 to 3 meters above tide level are possible along parts of the Philippines. It's also worth pointing out, and a reminder, that it was very recently that the central part of the country also was struck by a fairly strong earthquake. And just to recap, of course, everything else that's taking place. But yes, but go ahead, Belle.
No, I was just going to say that also we're getting some commentary here from the director of the State Seismology Agency in the Philippines, saying that this is an earthquake that's 10 kilometers deep, so they're still continuing to collate more information. But as you said, yes, those hazardous tsunami waves are possible. So we'll bring you more details as they come to hand, but that is the latest we have on this earthquake just recorded in the Philippines, Indonesia and Palau. It's 11:29 a.m. in Tokyo. Japanese markets are just about to go into their lunch break this morning, and we are seeing a move to the downside here. So it's very much reflecting the broader sentiment today in Asia. It is risk off following what we had on Wall Street overnight, concerns about valuations. But also this has been a pretty sharp run up in Japanese stocks over the past few sessions as well, given you've got investors that are really reappreciating what the equity picture or the dynamics will look like under Takeuchi. And on that point, of course, as Takeuchi takes that leadership position or is set to take the prime ministership in Japan, one of her early tests is going to be the negotiations or the trade relationship with the Trump administration. It is possible that President Trump makes a stop in Japan later this month or within the next few weeks. And we are just hearing from the trade negotiator here, Akazawa, speaking in Tokyo, saying that Trump is interested if U.S. cars have a presence in Japan. But of course, it's a car market very much dominated by the domestic players.
Yeah, and small streets. Like I think we were joking about this a few months back. People have never seen a massive F-350 pickup truck in the streets of Japan, and because they're not built for that. But this is an ongoing story, of course, that will be continued to track. And also just to mention, too, because we are entering earnings season in the U.S. and also in Japan, we have a thick of earnings already coming through there, in fact. And you got to wonder how corporates there will be framing two major macro themes. One is the exchange rate and to what extent this actually does benefit a lot of the exporters there. And number two, the politics and the trade uncertainty out there. We'll put those three things together next time for you. Just a reminder, Taiwan markets are shut today. We are looking, though, at declines across the benchmark itself, and not that Taiwan would have helped if it were open today. Korea is coming back online today after being shut for several days. That is the offset. But still not enough, as you can see clearly, 0.6%. S&P futures, though, are indicating that we might get a slight bounce going into the weekend. Apart from that, tech, which is really a function, so top row left side is really more a function of what we're seeing over in South Korea. We should also point out that if you look at Chinese tech, which was had come under tremendous pressure yesterday, is still about an hour into the cash market session, also coming on cash markets on pressure. Can we please also, if we have a board there on Chinese tech, just to underscore visually what we're seeing across this market as well. So Hang Seng Tech, last we checked, was down over 1%. We did see some pressure there. Baidu, Alibaba were down substantially. We're down about 1.7 there. Can we show that graphic, please, if we can? Hang Seng Tech Index, please. Thank you so much. We're looking at declines there of about 4.5%. Thank you so much. There we go. Just to underscore that point, about an hour here into the cash market session in Hong Kong.
Yep, and let's stick with the Hong Kong theme because there's been a deluge, really, of companies going public this year. Very much a red-hot market, but one of those has been Dahon, which is China's biggest maker of folding bicycles. Shares have surged 36% on its debut just a month ago, but have since given back much of those gains. I mean, I do want to put it in context. We're trading around 51 Hong Kong dollars a piece today. They were offered around that price as well. That's what they were sold at in the IPO process. But let's bring in the Dahon founder and CEO, David Hong, joining us this morning. So, David, talk us through the IPO process, but also the trading debut and how you've also monitored the dynamics in the period since.
David,
Okay,
are you there?
Yes, I'm here. I have viewed your questions and have prepared answers.
Yeah, go ahead. So, David, we were wondering, it's been a few weeks since the shares listed. How has the business been, and what plans do you have for the money that you guys just raised?
The business continues to grow or accelerate, and we are pretty happy to see a growth from our initial period. A growth of somewhere between 25 to 30% already, up and down, of course. So we are pretty excited about it.
And what does the growth look like to you? What's your expectation around how the business goes from here? Are there any key markets you're looking at or key products?
Well, we have been growing, accelerating fast against the general trend of the world bicycle scene, and we're happy about it.
Okay, tell us, we're entering the fourth quarter of the year, and I think some people say the blessing, some people say the downside of being a public company is, the market tracks financial performance, David, and I wonder how you think your business is tracking this year as we go into the final 3 months of the year relative to what your expectations were at the start of 2025.
It's a little faster than we expected, based on our recent growth, recent years of growth. We have, for the first 4 months, grown by almost 50% in sales, and the profit after tax has grown perhaps 70%.
And is there a growth rate that you are targeting or you want your team to endeavor to achieve in 2026, David, looking at the business?
Yeah, there's a high probability that we would come within our target of tax profit after tax of about 40% growth from last year, and at about over 80 million RMB.
Which specific consumer segments are showing the most resilience, and how as well are you tailoring your products to those consumers?
Our mainstay, of course, has been in folding bikes, but our recent business has expanded to e-bikes and road bikes because of our technology.
Yeah, David, I was actually wondering, for a global audience that is looking at the company and foldable bikes, for example, what do you think sets your product apart? What's the differentiating strategy that you can implement really in really let's put a mode of transport that's been around let's call it for hundreds of years?
Well, I think the bicycle has been around for a number of years, more than a century, but there's a lot of weak spots in the bicycle design, not just folding bike. We being one of the strongest R&D team in the industry, we have actually made a lot of inroads and solving a lot of the existing problems. And now some of our better folding bikes are outperforming than over name brand folding name brand road bikes by quite a bit, in spite of its small size wheels. So we are very, very excited to, we have actually started to partner with some name brand regular bike companies to improve on their products.
Oh, David, could you tell us more?
Well, you know, road bikes, one of the main, or the main issue is to or selling point is speed. But now our affordability, affordable bikes are in some cases, in many cases actually, quite a bit faster than these road bikes. So we have already started producing our road bikes, and a lot of our growth comes from road bike fans turning to our product because of affordability and transportability in a urban society, either because of home space and also because of transporting, ease of transporting them to outside, to parks and greenways, mostly out of the urban city.
David, thank you so much for taking the time. We'd love to speak with you again, and certainly a fascinating business and business model. I actually saw, I was in Shenzhen a few weeks ago. I actually did catch some of your products on the streets. They're fantastic. David Hon, thank you so much, founder and CEO there at Dahon in Shenzhen for us. Plenty more ahead here on The China Show. Right, welcome back. We'll get you guys an update, the breaking news this hour, that massive earthquake that hit the southern Philippines. The Pacific Tsunami Warning Center says that hazardous waves are possible along the coast of the country. 7.4 earthquake based on initial numbers that have come through. Let's bring in our reporter out of Manila, Neil Jerome Morales, to tell us more about what we know so far about what's taking place there. Neil.
Yes, hello there. So government officials, local officials, civil defense officials are expecting damage and tsunami from this. They have been receiving reports that schools, buildings, residential homes were damaged. They have seen some cracks on the building so far, and according to videos and photos on social media and media reports there, people have evacuated homes. They're lining up on the streets to remain safe from the aftershocks of this massive earthquake.
And talk to us about those aftershocks as well, because we've been talking about the tsunami threat that's also been included.
Yes, definitely. So this earthquake is relatively shallow, 10 kilometers deep, so the tremor is really felt on the surface. So there are ongoing aftershocks right now, so people are still panic. People are still fearing for their safety. That's why they're still outdoors. Some cities have canceled classes already, and some are expecting a cancellation in government work. And then officials have ordered the evacuation of people to higher ground, especially the coastal communities. Lots of coastal communities in this area, Davao Oriental, Davao del Norte, so they have to be careful in terms of tsunamis.
Yeah, and for our global viewers, of course, those are provinces in the southern part of the country. Jerome, just final question for you. Given the location of where this earthquake hit, did any of you guys feel it in Manila?
Yes, thankfully it's a bit far from the epicenter, but yeah, the damage would be really on the southern part of the Philippines, and partly it could maybe it could be felt in the central Philippines, which just suffered from the deadliest quake in 12 years in the Philippines. So really awaiting some more developments on that part.
Neil, thanks so much for joining us. That was Neil Jerome Morales there at Manila. We'll have plenty more ahead. This is Bloomberg.
All right, welcome back. Just an update here. In fact, we're just getting a lot of breaking news this hour. So Hashkey, we are learning that the company is mulling an IPO here in Hong Kong. So they could be pursuing a listing here in the city as soon as this year. That's according to sources. And it's just in terms of the money that they're looking to raise, about $500 million in Hong Kong. That's, again, based on sources.
Yeah, it was one of the first 2 exchanges in Hong Kong to be licensed. Yeah. So it would be quite a significant one. But we will leave that there because we also have another big story that we've been tracking this week in Hong Kong. It is, of course, Friday. And if you are feeling thirsty, well, it seems like you could be doing a lot worse than heading to Leone, which is an Italian-themed outlet that's just been named the world's very best. It's the first time an Asian venue has taken the crown, and this one is only about 3 years old. So joining us now is Leone co-founder Lorenzo Antinori in studio with us. So we were just talking there in the ad break about the process, and you weren't sure if you would make it to number 1. But just talk us through. Yes, you weren't called number 3. You thought you might be number 3. So just finish off. You made it to number 1. What happened?
Well, it was an incredible emotion because we got called as we thought we were number 3rd. And then suddenly they announced that the winner, and we were on stage. Such an emotion, especially being in Hong Kong, and the whole event being hosted in Hong Kong in front of our friends and our family. It just made it so special. And yes, it will take a few days to recover from this, but
recover from the party, do you mean, or recover from the from the award?
I mean, it's been. We were just mentioning it's only been 3 years, and you guys have gone out from strength to strength. How do you, like, as someone who oversees the product and your offering, how do you, like, where do you go from here? Like, how do you improve the bar?
Yeah, it's a good question. You know, we never take these awards as the ultimate goal. The awards are a consequence of the work that we put on every day in the venue. For us, it's always been, how do we improve what we have? And from, you know, yesterday we came back to the bar and, okay, we need to change, some tables needs to be fixed, the lighting, the music. So every day is an opportunity to improve the product and the quality, because I think this is what actually consumers are looking for these days.
We'll go more into what consumers are looking for, because we talk often about how challenged the backdrop has been for F&B in Hong Kong, and how much people haven't been willing to spend on pricier offerings. What does it look like for you?
I think it's about really focusing on creating quality experiences. I think after COVID, consumers nowadays are picking the moment and the time to go out, to spend their money, and I think those moments need to be quality moments. Needs to have also the reason why I think Leone was successful was because consumer managed to probably connect on an emotional level with the venue itself. And we are very mindful about the pricing that we offer and the quality. So I think moving forward is going to be really that balance between quality, affordability, and creating also a space that is accessible and is affordable the most.
Much has been made over this trend as you go further down the demographic. The younger the crowd, the less people tend to be drinking these days. How is that affecting how you look at the business, generally speaking? And is that something you're seeing, by the way?
For sure. I think the younger generation, they are more, I think they have more knowledge about what they're drinking.
Okay.
This is because of all the media tools that we have. I think it's important from our end as an operator to understand their needs and just create offerings that are able to fulfill their needs. So having a good quality non-alcoholic offering, having a vegan option, a vegetarian option on the menu. I think it's very important not to be stubborn. It's important to be flexible, to be dynamic, and constantly be able to change the offering and being able for changes.
Can we ask you, though, what the average spend looks like, and has that changed at all over the past 3 years?
Since you've been winning and winning.
Well, Bar Leone, we are an Italian cocktail bar, and I think at the heart of any Italian experiences, that's where I was born, there is always this sense of conviviality. Food and drinks come together with people and friends. So the food element for us was very important, and I'm very open. 20% of our revenue is food, which is pretty high for a cocktail venue, and I think we are looking at probably just over 250 Hong Kong dollar as the average. But of course, guests in Bar Leone come, and they don't just have cocktails. They come, they sit, they have a meal.
Yes.
And I think that's really what makes the place special for us. Food, drinks, friends, all together. And then suddenly these guests, they don't go for dinner. They just stay longer in our venue, and it's great.
Well, I have to say, the number of times I've been to the bar was before you won #1 in Asia and the world. And one of the first things I actually noticed was how good the food was at your place. So kudos on that. Now, you're in a good position now because you're #1 in the world to, in some ways, be a satellite and a sort of representation of the F&B industry in Hong Kong. This next question is not a focus on the negatives, but what do you think the government needs to do to improve the flow of tourists into Hong Kong and to really make it an F&B center?
I think already there has been some great efforts. I mean, having the opportunity to host World's 50 Best here in Hong Kong, Asia's 50 Best in Macau, this is incredible. All the friends, all the professionals, the industry leaders coming to Hong Kong for 5 days. These are the type of events that we need, and I think, and I'm sure that the government will keep them coming to the city. We need them. It's a great also a moment of conviviality and community, which makes our industry so special.
So you've had Bar Leone, you've branched out into Montana, but what's next? Just give us a sense of the pathway.
I like that you mentioned Montana because it's our new baby, and I'm very proud of it. Well, we're going to open Bar Leone in Shanghai. It's going to happen in November. We are very proud because I love Shanghai. It's a city that has an amazing F&B, very thriving, and so November is the month for us.
Where in Shanghai? Just very quickly.
It's going to be in French Concession.
Oh, there we go. Fa Zhu Jie. Fantastic. That's a fantastic location.
Thank you.
Thank you so much, and congratulations again, Lorenzo, Antinori, there, Bar Leone, and Montana, co-founder there. And for our viewers and clients, you can catch an insider's guide of the money and people shaking up the finance hub here in Hong Kong, the news edition newsletter, and of course, this award is part of that newsletter this week. Plenty more ahead. Actually, no.
Well, I mean, we can if you want, but we can also just do a quick market check because there are a lot of things that are moving today in the session, and SMIC is one of those with extending its drop. But we'll get more details on that. We'll leave the bar stuff here. Great segment. More ahead.
Oh, okay, no, okay, so we've had a little bit too much cocktails already. I'm kidding, no, we didn't have anything. Okay. The fact that we are ending the show here on a fairly bright and sober note, to be more specific, is just takes us back to markets. But, okay, you know what, since we're talking about this, Bill, what's your go-to drink?
You asked me that, and I just couldn't even remember one.
No?
Yeah, wine, I guess, to be honest. Yeah, but I have been to Bar Leone. It's very nice.
A good glass of red and some... okay.
We'll get to SMIC because I do think we want to get into this story. Yesterday we saw it really dropping significantly in the afternoon session. Today it's accelerating that decline in the morning session as well. But there is report that brokerages have cut the stock's margin financing ratio to 0, and they're concerned about valuations that exceed regulatory thresholds. It's also fueling concerns over stretch pricing. I think it really puts into perspective how important the upcoming season or earnings season is going to be for some of these chip players in China, given you've got a lot of hype around the industry, but how much real innovation you're actually seeing on the ground. Another stock that we're watching is JL Mag Rare Earth, because this is a company that's just reported its earnings. Third quarter net income looks to have risen pretty substantially, or that's what they're expecting, up to a 220% gain year on year. And leaving you here with a final picture of the studio for us, but as we said, happy Friday to everyone. Obviously, we need a weekend. Insight with Haslinda Amin is next.